Hello, and welcome to myfinanceteacher.org. Time for another video, and in this video we're going to talk about stock market and crude oil. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Looking at S&P 500 at the moment, you see the last two cycles on the screen, one between February and December 2018, and another between December last year and June this year. Generally, these cycles last for about half a year, but sometimes they are stretched, like this one between February and December last year. The current cycle has already been going on for more than 7 months, so based on normal duration, I would expect a decline in S&P 500 sometime over the next several weeks. Looking at other technical indicators, the 14-day RSI has been into overbought territory over the last few weeks, also indicating that the stock market is probably getting a little bit too hot. Current price is also stretched by about 9.4% above the 200-day moving average, and when the price is this far from the 200-day moving average, it means there is a chance that mean reversion might pull the price back down towards that long-term moving average. Looking at shorter-term daily cycles, which usually last for about a couple of months, the current one has been going on for only 38 days. So the stock market can still go up for another couple of weeks before it will be due for a correction down. Looking at other interesting indicators, this is a Fear and Greed Index by CNN. Market tops are usually indicated by extreme greed. Like here, for example, around May of this year. Fear and Greed Index is relatively high, closer to greed rather than fear. And that actually coincides to this April top in the stock markets. When the stock markets are collapsing into the intermediate cycle lows, that's when people are afraid. And that's when Fear and Greed Index is very low. Like here, for example, in December 2018, which coincides to this intermediate cycle low. So with this understanding, look at the current levels, which is somewhere at about 95, 96, I would say. This also shows that the stock market is quite hot at the moment and is likely to correct downwards relatively soon. Next, let's have a look at the put-call ratio. This is a ratio of basically how many people want to sell the stock markets versus how many people want to buy the stock markets. At the time of intermediate cycle lows, a lot of people would be afraid and a lot of people would be selling. Like here, for example, in December 2019, this index peaks when everybody is selling. And that actually again coincides to this December intermediate cycle low. At intermediate cycle tops, when everybody wants to buy, like here, for example, in May this year, that's when this index is very low. That coincides to this May top in the stock market. So with this understanding, notice that in November, December, and in January, we've seen this index very, very low, indicating that almost no one is selling. Most of the market participants are now buying, which also means that we might be close to a top and might start a correction down relatively soon. Next, let's have a quick look at the upcoming FOMC meeting at the end of January. Nearly 91% of market participants think that the Fed, the US central bank, is not going to change rates. So I don't see any surprises coming from the Fed at this time. So taking all of that into account, I think that although ongoing intermediate cycle might still continue for a while, I would expect some sort of a correction, possibly over the next few weeks, maybe into February. Next, let's have a look at crude oil. And as we discussed in the previous video, we were expecting a correction down as this intermediate cycle in crude oil comes to its end at an intermediate cycle low. And over the last few days, we see that oil has actually corrected down significantly. But I'm still not buying crude oil. Over the last half a year or even longer, it's been stuck between this range of about $51 to about $65. And the correction down over the last few days hasn't been severe enough to indicate an intermediate cycle low. So over the next couple of weeks, if crude oil moves down to low 50s, I might consider that an intermediate cycle low and might be interested in investing in crude oil. So to summarize, in both of these markets, the stock market and the crude oil market, I think it's best to wait for an opportunity to invest at an upcoming intermediate cycle low. If you want to catch that low, buy low and sell high, you know what you gotta do. Hit the like button, subscribe to the channel, and good luck in your trades.